Welcome to this webinar focused on the evolution of the Microsoft partner landscape and ecosystem in Belgium. Earlier this year, IDC conducted a global partner survey for Microsoft, plus 50 in-depth partner interviews across Europe. What we are going to do today is give you some data insights from the survey results, plus some background on the Belgium technology market, and some of the key takeaways from the partner interviews in Belgium. Combined, this info will provide a current perspective of the Microsoft ecosystem opportunity, as well as potential paths to enhanced growth and profitability. My name is Melissa Veemeyer-Holtz. I am a research manager within European Comms and Infrastructure Group. I've been with IDC around 13 years, and as part of my enterprise communications research, partnering, ecosystem, channels, and alliances are very important domains. There has never been a more exciting time to be covering partnering as a business discipline. There is a huge amount of innovation within wider partner landscapes. We see new ecosystem models, new go-to-market motions, new business opportunities, and how partners engage, work, and align with key vendors such as Microsoft is becoming a factor in determining business success. What we're going to focus on today can be broken down into 4 key areas. We are going to start with some insights on Microsoft's position as vendor within the partner landscape. We'll do this using some fresh data from IDC's 2022 partner survey and key takeaways from Microsoft partner survey. Then we're going to dive into the dynamics of the Belgian market, looking first at spending and customer trends, followed by insights on the performance and activity mix of partners operating in Belgium. Then we're going to go deeper into the Microsoft partner survey, looking at the approaches to partnership and how that translates into business performance. And finally, we will wrap up with some recommendations for partners. Now let's start by looking at Microsoft's position as a vendor within the wider EMEA partner landscape. IDC's own partner survey took place between June and September of this year. It includes 800 plus partners across the entire EMEA region with a wide variation of business models and activity mixes. What we continue to see is strong momentum for Microsoft in terms of the number of partners working with them, but also the level of commitment that partners display to Microsoft. In total, 53%, that's over half of all partners, were participating in Microsoft's partner program. And of these, 50%, so half, said Microsoft is our number 1 most important strategic vendor partner. This is an important statistic that shows the high level of commitment. And this momentum is growing too. For the partners not currently working with Microsoft, 14% said it was the first choice vendor to add to their portfolio. Microsoft's expansive portfolio, its footprint in customer environments, and the opportunities for partners are driving this. Overall, there continues to be growth and momentum in terms of the development of the Microsoft ecosystem. The Microsoft Partner Survey included 288 European partners as part of a global sample of 774. Not all partners get the same benefits from their relationship with Microsoft. Economic performance explained. For every $1 of Microsoft revenue, partners generated a multiple based on their specific activities, whether they were selling their own software, providing services, reselling, or a combination of all 3. These multiples are particularly important in the European theater, where Microsoft's partner landscape is highly diverse, with a blend of established partners and emerging ones focused on specific areas of activities. What we found is the following. Microsoft partner economic performance expands with their IP focus. Partners that bet on Microsoft grow faster and generate higher margins. Partners with a focus on software or services experience higher gross margins. Partners that invest the most in their unique intellectual property or IP do the best. And last but not least, partners that are actively engaged in co-selling with Microsoft grow faster. Now let's dig into that economic value data a bit further. In this study, survey respondents' business models were determined based on their largest revenue generating activity in terms of revenues share across resale, owned services delivery, and software development. For example, if a partner derived 30% of revenues from resale, 40% from services, and 30% from software development, it would be classed as a services-led partner. IDC has established that for every dollar of Microsoft revenue, partners derive a multiple in their own business based on their activities or revenue share of these activities. A key insight in expanding economic value and pathways to grow is that services-led partners in Europe make $5.75 and software-led partners make $7.86. So in comparison, resale-led partners in Europe make $2.21 in economic impact. Put simply, the transition from resale towards services and software-led partner business models opens up new economic value opportunities for partners to tap into. All well and good, but it is also important to contextualize these trends against the customer environment. To do that, we look at the current market situation in Belgium. First, on a European level, there is a degree of uncertainty on economic prospects. Recent IDC surveys of customers indicate 50% predicting negative GDP growth in 2023, 61% anticipating a recession in their home country in growing year. Even against this wider economic backdrop, technology spending remains resilient. We've seen this throughout the last few years. Those working in the technology sector are fortunate. We continue to hear this from partners. There is a resilience that continues to be seen. European IT spending has outpaced GDP, and even when GDP contracted, IT spending grew. This resilience continues, especially from software and services perspective. Digital investment is seen as a way of building business resilience. It is a way for customers to become more efficient. It's a way for customers to extend their competitive advantage. Tailor the rationale for investment to the individual customer position. That's what it's about. Now let's look at the Belgian market itself. A few facts and figures. The IT market in Belgium will grow at an average rate of 6.7% CAGR between 2021 and 2026. The software market will outgrow the overall IT market, which is around 11% CAGR, as Belgium customers prioritize software-based solutions across their technology stacks and strategies. Partners in Belgium stand to benefit from these spending trends as customers require third-party expertise to source, adopt, manage, and extend the right solutions. With regards to the cloud market in Belgium, on the right of the slide, IDC expects it will nearly triple in size between 2022 and 2026, growing at a 5-year CAGR of 24%. SaaS remains the largest cloud services category, accounting for 52% of the cloud market by 2026, while platform as a service is seeing the fastest growth at a CAGR of 33%. When we talk to Microsoft partners in Belgium, we realize that for them, it is key that they can respond to changing customer needs and requirements, and this is something Microsoft's open approach enables partners to do. Bart van Kerkhoven, partner at Delaware, mentioned the importance of integration capabilities on Azure for customers. Kurt van Hoeken views the customer is in control and that the business is there to assist its customers. It is all about putting the customer first and providing the customer with the right services and products that create trust and accelerate cloud innovation. And when we ask what Belgian customers are looking for, now these priorities are top of mind. And yes, it is kind of back to basics here, but we really see successful partners focusing in these basic areas, leveraging technology platforms to build the narratives that resonate with customers, but also making sure that short-term benefits and gains also fit with long-term agendas and visions. Among the surveyed partners in France and the Benelux, so from a regional perspective, over a third, or 38%, of the partner revenue is from industry-specific solutions, with the remainder, 62%, aligned to horizontal solutions. The result demonstrates that the ability to show expertise and proven case studies in specific industries remain important. When we look across key industries in Belgium, we see strong cloud growth. Cloud is the core platform underpinning customers' digital transformation projects, and the rapid growth in cloud services is changing the IT landscape in Belgium. How Microsoft partners position themselves in relation to these trends, that will be a determinant of future success. In 2021, 96% of partners in the France and Benelux region grew 82% or maintained 14% their Microsoft business. 98% expect to grow, and that's indicated by 88%, or maintain by 10% their Microsoft-related revenue in 2022. Only 2% of partners in this region expects a decline in their Microsoft-related business. This is an endorsement of the strength of Microsoft-related revenues. When we think about everything as a service, there are strong, resilient, recurring revenue streams for partners with Microsoft. Plus, there are upsell, cross-sell opportunities as partners engage with more of the Microsoft technology stack. When we look at partner activity mix, we split into three categories: sell, serve, and build. What we see with France and the Benelux partners is that the vast majority span two or more of these categories. We also see how prevalent services has become. 88% of all partners in France and the Benelux sell their own services. 65% sell third-party products and services, and 51% are engaged in build. We see over a quarter of all Microsoft partners spanning all three activities, so that's the graphic on the right, and 51% spanning two activities. Partner business models are fluid and dynamic and need to be assessed constantly. Your activity mix is not fixed, so you need to follow the opportunity and think about margin potential as well. So let's dive deeper into these business models of Microsoft partners. And for this, we're going to look at a wider European level to see trends in a bigger sample. Business model focus translates into differentiated business outcomes for partners. So let's look at gross margin and revenue growth for Microsoft business partners. And let's see how that differs depending on their focus. What we see here is that Microsoft partners with a higher intellectual property focus tend to generate higher margins. Services and software-led partners in Europe are more profitable, operating at 26% and 32% gross margins respectively, compared with 18% for resale-led partners. And European software-led partners also expected to grow their business by 43% in 2022, compared with 16% for services-led partners and 15% for resale-led partners. When we say resale-led, this refers to partners with a sell motion as their largest revenue stream. Survey data underscores that partner investments in IP or intellectual property are consistently linked to positive economic outcomes. Partners that invest more than 10% of their revenue in IP development see faster growth compared to partners with lower investment levels, equivalent to 10% or less. Put simply, partners that invest more in developing their own intellectual property are growing faster and expect to continue to grow faster. And we see more and more partners emphasizing this in their own strategy and their business roadmap. It's very easy to say invest in intellectual property or IP. That brings you quickly around to the question, what constitutes own IP? When we look at where partners are focusing their investment in developing IP, we see some interesting trends. First, building out consulting and professional services and SaaS offerings forms a major part of this trend. Second, the efficiency that SaaS offerings provide and the ability to scale in a non-linear fashion is critical. Building IP as part of a high-value services provision is where most investment goes. And four, so repeatable services and consulting methodologies, often supported by own software, provide a solid platform for partners. What became clear as we analyzed the data from the survey is that commitment matters in terms of partner performance. Partners with a deeper commitment to Microsoft achieve superior profitability and have higher revenue growth expectations. Let's take the chart on the left and unpack what it means. We've been deep inside this data for a couple of months now. Partners that generate more than 75% of their total revenues from Microsoft Business achieve gross margins of 30% on average for their Microsoft Business. And partners that generate less than 25% of their total revenues from Microsoft Business achieve gross margins of 14% on average from their Microsoft Business. It is a similar story in terms of expected growth rates. The deeper the commitment to Microsoft, the higher the expected growth rate. What does this say? For us, it tells a story that balancing multiple competing vendors with a partner portfolio is getting harder. A trend we're also seeing play out is that it's much easier for vendors to invest in and dedicate resources to partners that are highly committed. And we do see a correlation here as well. Partners that are heavily committed to Microsoft are more likely to have access to co-sell resources. It of course makes sense for vendors to invest in co-sell motions with committed partners. And partners that embrace co-sell motions with Microsoft grew faster in 2021 and expect to grow faster in 2022. Also, close alignment between partner and vendor drives better customer experience and customer outcomes. And creating a symbiotic relationship based on trust and mutual commitment is key. We heard this time and time again in all these partner interviews. So let's bring things together to think about what this means for partners and specifically what it means for partners working alongside Microsoft, so the partnership value. The first point to make here is that commitment matters most, and it matters more than ever. It's the gateway to a significant number of benefits and advantages. It creates visibility and recognition. And as we see the importance of sell with motions as opposed to sell to and through, it matters more. It is clear that Microsoft's momentum and partner momentum go hand in hand. Put simply, Microsoft's ambitions are achieved through working with partners. And yes, the go-to-market models can change and programs can evolve, but this is in response to a wider structural technology market changes, including changes in customer behavior. So partners can fight the change or they can embrace it. There is a huge opportunity in the Microsoft technology stack, and there is a huge opportunity around cloud, security, intellectual property creation, and marketplaces. So we want to leave partners with 4 recommendations to think about. All of these should be considered in the context of existing relationship with Microsoft, existing its model, its existing model and existing customer base. But think about the pathway for your business. What we see is that successful partners, in terms of both revenue growth and margins, are investing in the relationship. They are building cloud capabilities and skills. They are focused on their own uniqueness, their own intellectual property, and they are leaning into Microsoft and its ecosystem to build deeper and closer relationships to drive co-sell and collaboration. There are definitely some headwinds in the macroeconomic environment. And so for partners, making sound decisions on which vendor relationships to invest in is more important than ever. And with that, we've come to the end of this webinar. I really hope you enjoyed it, and I really want to thank you for listening. Please feel free to reach out and get in touch if you have any follow-up questions or comments. Thank you and goodbye.